Well, an historic move today, the Federal Reserve announcing it'll hike key interest rates in an effort to fight record inflation. But experts warn it could come at a cost to many Long Islanders.
It's a really bitter medicine to take to get this economy healthy again.
Economic analyst Marty Cantor says the Federal Reserve's largest interest rate hike in more than 20 years is a big deal.
Usually the poor and the middle class will fare worse. The wealthy will not feel this very much.
As for why the government is doing this, it's to try and slow down what is the highest rate of inflation in 40 years. Experts say the pandemic is largely to blame for that. While the government's stimulus plans provided a safety net to millions of Americans who suffered financially, Cantor says they also had a downside.
We have put in about $4 trillion in the economy for which there was no economic activity to generate it. So we have too many dollars chasing too few goods, which is what causes inflation.
Credit card interest rates are expected to go up, mortgage rates as well. That will have an impact on people looking to buy a house in what is still a skyrocketing market.
I think they are pulling the trigger quicker.
Jennifer Calamia of Signature Premier Properties in Ronkonkoma says with mortgage rates already above 5%, well-qualified homebuyers are feeling the pressure to pay above asking price.
They don't want to lose out. They don't want to wait any longer because we don't know where the interest rates are going to go. We don't have that crystal ball to figure out if we're going to, be at 7% in another couple of months. We don't know.
So what does history show us, and what do you expect to happen here? Will inflation slow down?
I think inflation is going to slow, and I expect a recession. History has shown that most inflationary periods end in recession. And then once we hit recession, the economy starts turning around.
And this 0.5% interest rate hike by the Fed follows a 0.25% rise that just took place in March.